is over the 50, where the 20 is over the 50, is over the 200. And in a bearish setup, we have the 20 below the 50, below the 200. TC1, TC2 is going to be traded on the 5-minute. And this is these are the rules. Pretty straightforward. We're always going to be trading with the trend. We have a fib setting. Let me put that up here. Give me 1 second. Here are the fib settings. You can ignore this and that. So we have the 0 and 1 are for the high and the low. Entry at 382. Stop loss at 0.17. And take profit at 1272. Okay, let's jump into, I have an example here. And we'll go over the confluences with this example as well. This is on Sol. We have the trending price action, the high, low, higher, low, and then this real big higher high here as well. Our EMAs now are, this. EMAs are now lined up. The 20 is above the 50, is above the 200. From here, we get our fib. And we always, here, I'll redraw this because I know this trips people up sometimes, is that we always start from the current price to the previous swing. Like that. Not from left to right, always from current to previous. The yellow being our entry point. Stop loss is the red. The 0.17, 382 is the entry. Take profit. 1272. Now, some confluence that we've been working on and that we've seen lately is having some confluence around entry. Now, in this case, what I like to do is I put a zone around the entry point like this, and I look to the left to see if there's any confluence for support and resistance. So in this case, we have good resistance here, some good contact points here, a little bit here. This almost reached that zone, and then some resistance here as well. Another confluence that we're looking at now is fair value gaps. So now we also see, now, I'll explain fair value gaps well before we go any further in case there's some confusion on it. Fair value gap is a 3-candle pattern. You're always going to go, it surrounds a large candle. It starts in the first candle's high in a bullish sense to the third candle's low, creating this gap between the first and the third candle. This right here is the fair value gap. There we go. So that's also the confluence around that same entry point that we had here as well. That also lines up with good contact points of support and resistance. Let me put the bit back on here as well. Now, if this was bearish, if this was going the other way, here's a good example here. Same thing, the gap between the first and third candle, the low of the first in this case, to the high of the third, creating this gap over the larger candle in the middle. So that is another fair value gap. And as you see here, let me highlight that. Price went up, retraced into it, up again, retraced into it, up again. So these have been very reliable as far as points of retracement and good confluences for TC1 and TCs in general, TCL, even in the TCL Max we've been looking at as well. All right, let's get back to this zone here. So we have the fair value gap. We have the zone of support and resistance, the confluence to the left. And we'll play this out and see how it works.
John, do you
Yes.
use the TCL helper all line up in green or all bearish as a confluence or not?
Yeah, that's a rule. These have to, oh no, you're talking
Yeah,
about the table.
yeah, all the time frame.
So
No.
it's not necessarily a rule. It is a good confluence. So when it is all green for longs in this case, or if it's all red for shorts, that is definitely a better confluence to have. It isn't a requirement, I guess, as far as rules go, but definitely a better confluence to have if you have it. Like if you're looking at a few different setups and you see one is all bullish, then yes, for sure. Um, okay, so yeah, let me point this out. It made perfect contact with both the fair value gap. Let me change the color of that. Both the fair value gap and the support and resistance zone. Sniped entry. Bring this down. Oh, hello. There we go. Sorry. Give me 1 second. Jumping all over the place here. Hey, give me a second. What happened to my chart? Sorry, I'm lagging a bit here. There we go. All right. Ends up making contact with that same fair value gap, same support and resistance zone. And there's full profit. Let me bring this out here. And that's the idea of now using the fair value gaps and support and resistance as confluence for entry. We can look for another one as well while we're here.
And John, you backtested that, right? So you have
Yeah.
some logs, and how was the result?
The result was here. I took another one after the mentoring and I updated it somewhere. Where is it? 70.96%, 22 out of 31. So 22 wins, 9 losses, plus 79 risk factors.
And
So
how many losses do you have back to back? Sorry, I'm
I
kind of asking.
believe, I think at most it was 2, I believe. And those were ones that were right when the trend was ending. That's when I see most of the losses coming into play. Here's one followed by a win. Let's see. Again, the trend ends here with the loss followed by the win. Push that back in. There you go. Continue here. Again, the trend ends with the loss followed by the win. These are wins.
Could I ask a question?
Yeah, of course.
I was curious with the you said there are two new confluences, so fair value gap and support and resistance. Is it more of either or like is it a rule now that both need to be in there to be valid setups?
Both the support and resistance.
Yeah, both support and resistance and fair value gaps to make it super contained or like super accurate or more accurate, you know.
Um, I would consider it in my opinion, yes. I
Okay.
see them. I see at least with now this back testing that I did. I don't know what happened to my screen. Give me 1 second. The back testing that I did with this over the last 2 months, was only setting up fibs based on those levels, support and
Mhm.
resistance levels,
Yeah,
and I was able to get over 70% and 79 risk factors and profit. So
that's crazy. Good for
yeah,
you, man.
yeah, because I mean it's I don't know. We were using the EMA lining up between entry and stop loss for a while,
Mhm.
which is a good confluence because price does tend to retrace into the 200 more often than not. But when there's support and resistance there as well, then it's the chances of it working out are much higher. Yeah.
Yeah.
And with 1 to 4, even if can't predict when the trend ends, with 1 to 4 risk to reward, taking that one loss at the end of a trend followed by 3 more wins, you know what I mean? It always works
Yeah,
out. Yeah.
yeah, yeah, yeah. I get what you're saying.
Yeah. Um,
Um, I forgot what I was gonna ask.
John,
Thank you though.
yeah, yeah. Any more questions? Let me know.
you have a few more people asking if you could just go over fair value gap once more.
Yeah, of course.
I know it's recorded, but just there are quite a few people asking, so if you could just do it again one more time.
Yeah, of course.
Thanks.
Yeah. So 3 candle pattern. I can number them too here. If I can use this as numbers. Nope, that didn't work. Let me delete that. Into here, 1. Call this 2. 3. All right, guys, here we go. Okay, so 3 candle pattern. The easiest way to identify them is to look for the big candles. Look for the big, long body candles. Not so much the long wick candles, but the ones with the bigger bodies. And it's always the gap between the first and the third candle surrounding the big candle in the middle. So in a bullish sense, it's going to be the high of the first candle compared to the distance between that and the distance at the low of the third candle. Sorry, there we go. So this right here is a gap between the first and third candle that's covering the second candle. And then over here, this would be your first candle. It's low, and the third candle's high. Now this is a gap here, a bearish fair value gap. Bullish fair value gap right there. Yeah. And you can see here when even the bearish one still retraces into it, uses it as support, comes down into this bullish one, back up, uses it again as the rejection of support, gets stuck in this one before it takes off. So yeah, fair value gap, the gap between the first and third candle across the large candle in the middle. So even this down here, this small candle, can't really even see it, but this would be considered a gap as well. From the high of this first candle here, skip the second to the low of the third, that is also a gap there as well, which is where that ended up retracing into as well. We have questions. You got a hand up? Yeah, go for it. You can unmute yourself. And
Hello. Yesterday, I asked a question about the EMA 200 as a confluence, if the EMA 200 is inside the stop loss. And you said that the lineup of EMAs is more important, and you would place this 200 after in terms of importance. Where would you place this fair value gap in terms of importance? Would you place it as more important as eventually the EMA lineup, or after, or even after the 200 inside the stop loss? Did you understand?
yeah. So as far as EMAs lining up bullish, that's a must. That they have to be 20 over 50 over 200. As far as the 200 being between entry and stop loss, I think the fair value gap and the support and resistance is now definitely more important than the actual location of where the 200 is. Because there were some instances in the back testing that I did where the 200 was much lower than stop loss, but because of the support and resistance levels, they ended up working out. And then also on the other end where the 200 was well above the entry, and it seems like I should have missed entry if it hit the 200 and went back up. But because of the fair value gaps and the support and resistance, those ended up working out as well.
And if I understand, the fair value gap means, if I give a small definition, it will probably retrace to this gap.
Of course, yes. Because the way smart money works is that they're targeting two things. They're targeting fair value gaps, and they're targeting liquidity that sits just above the highs and lows. So like this was a high point here. Let me zoom in a bit. So we have a high point here. Sorry. And with this wick right here, they go and they target the liquidity that sits above it and come back down, taking out people's stop losses, right? And then when the imbalance happens, when there's more buyers than sellers, they want to come back down and get this liquidity down here to balance out the difference between the buyers and sellers. If that makes sense. So yes, fair value gaps are definitely more than likely going to get filled at some point. There's also instances where, give a good example here. Here's one right here. I believe. Maybe not. Give me 1 second, find one. Where there's fair value gaps that are disrespected, but then used as, it's called inversion, but then are used as support and resistance later on. Kind of like here. Here's some gaps in here. Let me put that in there. The bearish fair value gap. So this should have been filled bearish and then gone back down, but it was disrespected, went up, and then it was used as support before it went back up. So one way or another, whether it's a continuation of the trend or it goes right through it, it'll come back up and use it as support and resistance as well. So that's why the confluence of support resistance and fair value gaps go hand in hand.
What are your minimum contact points for support and resistance?
3, for
3,
sure.
Okay.
Just like kind of like a trend line where if you have a trend line that has 2 contact points, it's not the most valid. That's separate from channel. Channel is different, but a trend line, yeah, at least 3. Same with support and resistance, at least 3
Right.
to the left. And now there's some, we're going to experience this more now with this trending price action and all the pumps that are happening. There was some in the back test that I did where there was nothing to the left. But if I back out to a 1 hour, there's a huge contact point to the left on the macro. So you can also look to the left as well on higher time frames for confluence if you're in a position where it's not the all-time high, but it's higher than it's been in days, weeks, We got another hand, you can speak as well. You have a question?
Yeah, I have a question.
Oh, sorry.
Yeah.
For the fair.
Oh, you got muted.
Sorry, for the FEG, we'll look for the big candle, for the 3 candle pattern back in the chart, or isn't the wave that we are going to trade? Is it back in the chart or is it on the last wave?
In the wave that we're going to trade, yeah. So let's find another example here. So this is one of the tests here where the fair value gap, see this massive fair value gap here, was in the right where the entry is, somewhere inside of here. And using that level as well was also, let's see, to the left here, was this contact point on this wick here, giving it support and resistance confluence as well. And also here and here. So yeah, you're trying to find the fair value gap in the current price action of the trade that we're actually setting up. Yes.
All right, so if the fair gap value, then we look for resistance and support back in the chart, right?
Yeah, so so starting from the top, let me go back to this example. So in this case, so we have the higher highs and higher lows. Let me get rid of all this. We'll start over, give you the play-by-play on how I actually look at these. I start with the fib, the high, and we can even go to this previous low, right? And then I like to measure this. That's another thing that we look for, is to make sure that this has at least 0.5% for fee reasons. But and then from there, I'll put a zone here. And then I'll look to the left. And I see that even here, it went above it, it went below it. It's not a very good level from here to the left. So then you can bring it down further. Right? You can even go to here next, and then you can put the level down here. Now you can see is there confluence there as well. This just missed it. This goes through it. This has good contact here. And then we can also look at where that fair value gap is. So now in this case, this fair value gap, sorry, give me 1 second. This fair value gap is a little lower than that zone. So then we can even put this down another level. Move the zone down again. Now the zone, support and resistance zone, lines up with the fair value gap. It has clean contact here, one of the more recent contacts, and it has good contact points here as well.
So, John, in this case, you're not actually using the last move. You're not fibbing the last move. You're fibbing the move that aligns perfectly with support and resistance and the fair value gap. Is that correct?
Exactly. because that's what at least a lot of the losses that I had is just because I'm trading the structure rather than looking for the confluences around it. So now when I set up my fibs, it's mainly be only for the reason that it lines up in some way with some good contact points of support and resistance and fair value gaps.
Yeah,
Yeah.
it makes perfect sense, to be honest. Also, I wanted to ask, what if the stop loss is inside the fair value gap? You take the trade or do you pass on it?
I would probably pass on it. Or you can extend, like again, if I had that fib, I don't know, somewhere up here and there's this humongous fair value gap down here, that alone is a good reason to just jump right down to here. You know, and if there's another fair value gap. Now there's a thing too, is that you'll see fair value gaps, but they have already been filled. They've already been retraced into. I wonder if there's, let me see. For instance, here, because this is the first and the third, nah, it's not really a gap. But let's say this was a gap here and this has already filled it, then I'm not too worried about it. Also, the ones that stand out the most are the fair value gaps that break structure. So the structure is these higher highs and higher lows that we were talking about. So if we put a line here at this point and it breaks the structure, the candle that breaks the structure is the one with the fair value gap. And it's also the one that it retraced into. These are the most valid fair value gaps. The ones that break structure and the ones that also line up with support and resistance to the left, increasing the win rate significantly, you know.
With your setups, can you have your entry EMA above or entry fib above the 200 or below it, depending on like this, whether it's bullish or bearish?
Yeah, definitely. Because that's at least what I've noticed is
it goes, touches it and then goes up, back down, or
right.
up. Okay.
Yeah, I find that it makes more contact with the fair value gap and the support and resistance levels than it does the actual 200.
Okay.
Yeah.
Thank you.
Yeah. Go back from the top.
I was going to say, Fabin has had his hand up for a while. If you want to answer him
Yes.
first, and then
Yeah,
we'll
go
go from
ahead.
there.
Yeah, go ahead.
Hi. So I was wondering, so you explained what fair value gap is. So if I'm correct, you're looking for your entry within a fair value gap. Is that a confluence?
Yes, that's a very good confluence. Yeah.
Okay. And can the fair value gap also be used then as a support and resistance zone itself?
Yes, 100%. Yeah.
Okay.
Just like it is that where they're both lining up. Now that's double confluence. That's even better. Where this fair value gap also has levels of reaction of support and resistance in the past as well. Yeah.
Okay. All right. Thanks.
Yeah, of course. Sean.
Yeah, I was just wondering if you could, when you're looking at previous examples, if you can go into replay mode at that point so we don't see everything that's after it, because it's kind of, because you're using those context points as like confluence, but those weren't actually there if you're using that that move.
Oh,
so
these, these are, I'm sorry, these are just.
I understand. It's just for like to kind of engrave it in our minds about what it actually looks like when we're looking for it, because we didn't have those contact points to the right. Thanks.
Yeah. All we're looking at mainly is to the left, seeing what we have here. Even if you zoom in a bit, it's used as support. Breaks through, used as support. Breaks back down, underside retest almost here. Some resistance here in the small moves. Little support consolidation in here as well. It's also good. Almost resistance. Yeah. Any next? Bara? Yeah, I can go ahead. You can ask.
Sorry, I thought I was second. Out of a TCL helper, what other indicators do you use?
There are fair value gap indicators you can use. Let me see which ones I have here. I have a few. Smart Money Concepts is a good one. LuxAlgo also makes a fair value gap session. This one is also good for fair value gaps. Other than that, I just use the helper. Yeah, nothing more than that. Or it's I have the Pro Plus on here as well. I keep that. Always keep that on the chart. Who's next? Founders. Oh, no.
I think, yeah, sorry.
Okay.
I think Sean has had his hand up for a while, so he can go before me, and then I'll go after him.
Oh, did you?
I already
Yeah.
spoke. I'm sorry, I forgot to lower my hand.
Never mind.
Okay.
So I asked earlier, so do you need both fair value gap
Mm,
and support and resistance, or just one of them?
you can support and resistance. I always look for,
Okay.
and if there's a fair value gap there as well, then it's even better.
Okay, so you need a support and resistance.
Yeah.
A fair value gap is just confluence.
Yeah.
Okay, great, thank you.
But you'll be surprised that once you find the fib level that has the nice contact points,
It
how
usually has
coincidentally,
yeah.
you'll find that more often. Yeah,
Yep,
absolutely.
that makes sense.
Yeah.
Thank you.
Yeah, of course. Indomie. I'm terrible with names. I apologize. Go ahead.
No worries, John. Just quick question. If as the previous example, I saw the price returned to the entry point in the FVG for a few times before
Yes.
it finally moved out of the structure. So, is there a confluence or a rule you would use to kind of say, okay, so I think this has broken this structure, so I wouldn't take it. So let's say if it had broken the swing high, maybe, and then you'd kind of wait to see what happens, or
Right.
would you kind of, yeah, so yeah.
Let's play this through. Let's see what happens here. But if it honestly, with the testing that I was doing, I was letting them all play out. In the past, I had done risk management to try and make sure I can
Yeah,
keep
same
some
profit. Yeah.
Yeah, exactly. Because technically, if this ends up being a lower high, then this could be a lower low. Then you might bail on this, but it ends up working out perfectly every time.
Okay,
Not
got it.
every time, but more
Yeah.
often than not. So at least with the testing that I was doing, once I set it up and I have the confluences there, I don't look at it. I don't want to manage it. It gets to the point where you have to risk what you're willing to lose. You know what I mean?
Yep.
And if it's
All
one
right.
of those trades where you have to watch it, then you might be risking too much. At least that's how it was for me in the past. But yeah, no, I'm just letting these play out. As long as I have this confluence now, I'm okay with letting it play out. I can't get mad at myself because I made sure the fib in my entry was set based on the fair value gaps and or support and resistance levels.
Got it. Thank you so much.
Yeah, of course. DeFi.
So,
Yeah.
let's say you find either one or both confluence when it comes to the fair value gap and as well the support resistance. Then, what would be the best recommendation when it comes to the 200 EMA? It should be related in somehow. It should be close to one of those, or what you can say about.
Yeah, it's definitely better confluence when it's like in this case, it was very close to entry. Ended up wicking through it to get the entry. But again, in my testing, I was just making sure they were lined up like they're supposed to be in the rules. As far as the actual placement goes, some were below, some were above entry, and it seems that it reacts more so. There's more confluence around the support and resistance than there is the actual placement of the 200 now.
So the closer, the better.
Yeah, so it's definitely added confluence, but it's more important to find that support and resistance zone at your entry point. Yeah.
Okay.
Gotcha.
Thank you.
Yeah, of course. Check the. I don't know how to check the chat. Oh, there it is. Rami.
Sorry.
Yeah.
You said something about 5%. That's 5% stop loss, and can you repeat that again, please?
Of course. Let me get a position up here. So here we'll make this 2% and 1 to 4. So when you're setting up your 1 to 4 risk reward, we're trying to get minimum 0.5%, 0.50% from entry to stop loss. No, the main reason for that is because of fees. The smaller your position gets, the higher the fees will be. And then also this also helps you avoid trading the noise, I guess, if that makes sense, where like even right here, if you technically right here, zoomed all the way in, you can see like this is a high, a low, a higher high. The EMAs are, you know what I mean? But this is way too small, in my opinion. This to me is just the noise.
Okay, so
ideally
no less than 0.5%.
Yes,
okay.
0.5, yeah. Rami, you had a question.
Yeah, real quick for the support resistances. Are you looking specifically on the 1 hour and the higher time frames for those, or will you see one on the 5 minute and take those two?
The only time I've needed to go to the 1 hour is when we're pumping, and I just can't see anything to the left. Even if I move this back and back, there's nothing to the left. Then I'll go to the 1 hour and see if there's anything there. But most of the confluences that have worked out are all on the 5 minute. Yeah.
Got it. Okay. And then another thing, I mean, even after the questions, is something in chat that came up is maybe we can dive into the losses after you answer all the questions.
Yeah, of course. Thomas, go ahead.
Hey, can you hear me?
Yeah.
Okay. Your support and resistance zone, how do you determine the size of it, like the height of it? It has like the box you have on here has a certain height on the chart. How do you determine how big that's going to be?
It's just a little above and a little below the fib. It's kind of, there's no real specification on it, just as long as it's not just as long as it's not a line, because these tend to react, through these levels as a zone rather than a line.
Yeah.
So
Okay.
something that's comfortable, but at the same time, you don't want to, you don't want something like this where like you could say, oh, this is, here it is here, that's too big, because then that would have ended up, let's move this. That might have almost ended up stopping you out. You know what I mean?
Yeah. That's that's basically an entire Sunday's worth of volatility there.
Yeah.
Okay.
Exactly.
That definitely seems to be my biggest issue with it, is to determine exactly what would be considered that. But okay, just somewhere like around the entry.
Yeah,
and
just a little above
good.
and a little below. Yeah, exactly.
Okay. All right.
Yep.
Thank you.
Yeah. And Anders again. Yeah, go ahead.
I was just asking real quick. What coins do you trade for TC1s? Is it your TCL bangers? Is that what it is?
Yep. Yes,
All
it
right.
is. Yeah, this is now XRP is low on this list alphabetically and for obvious reasons, but this has worked out nicely in the past, but it's definitely down there for a reason. Other than that, yes, all of these are nice for TCL, TC1. Yeah. Sol and ADA especially. Very, very much so respect the retracements, the support and resistance.
Great.
Yeah.
Thank you.
Of course. Nathan, go ahead.
Yeah, hey Don, just a quick question. I had to run, so you might have already answered this. I don't know, but let's say you find the setup and the EMAs are lining up right, and you put your order in. What happens if like the 20, it starts getting close to entry, and the 20 goes under the 50, or things start to flip? Do you not take it anymore at that point?
No. As long as, for me at least, as long as that the 20 and the 50 don't cross the 200, then we're okay.
Okay.
But if these are lined up at the top of the fib at the beginning of the setup, then that's fine with me.
Okay.
More than likely, the 20 sometimes will touch or cross into the 50 at entry, but that happens more often than not. Yeah.
Got it. Thanks.
Yeah, of course. Let's dive into let's find some of these losses. Zoom out a bit. Let me go to 15-minute, get a better view of these. Usually where the trend ends is a win. Win. Oh, there it is. And again, this is one of the losses here. So the stop loss was 0.83%, so the range was fine. I had some, again, this was only one little contact point here. This was too high. This was too low. Where was the gap? The gap was here, although there was a gap up here as well. So I went right in the middle of the gap. And this is also touching, this green bar is 1 hour major support and resistance on the 1 hour. So it was getting very close to this level, which eventually would have changed the trend, rejected and came back down. So that was one of the losses. And it even also didn't even play through. Like sometimes you get tagged out and then it ends up going full profit, but this wasn't even the case here. It was when the trend ends, In this case, this one went well below stop loss. This range, again, the range was fine. we had support and resistance here. The fair value gap was lower, so we could have gone maybe to here. But again, that didn't change much. It had broken through this support and resistance on the 1 hour, this green bar, but ended up doing an overside retest before it went higher. So I guess if you're marking out your 1 hour support and resistance like I have, you might want to wait till it goes through retest before you start setting something up. That makes sense. Same thing over here, overside retest. This entry point had contact right before it and nothing to the left. I think maybe this is the one where I went to the 1 hour. Oh boy, yeah. And there was this wick that came through it. And there was some contact points here, small ones here and here. So again, decided to set that up as well. But again, not everyone's going to work out in your favor. Oh goodness. Here we go. Let me get back here. Yes, that was that loss there to the left. What was the other one right here as well? It started out well, and then it got stuck here. Turned out this was support and resistance from the next trade, but in this case, I wonder what happened here to the left. It might have just been a smaller setup. Let's see where that ended up retracing to here. Well, see, now the retracement's there. It did make a higher high and then got stopped out. So this right here looks like a liquidity sweep. So it came up above the structure, swept the liquidity, took us out. Didn't take us out, but and then reversed on us, which took us out. And then came down here to this structure of the fib, swept the liquidity again before it accumulated, and then distributed up. So again, not the worst setup because there is some confluence here again to the left, support and resistance to the left. So I guess from seeing what I'm seeing now, talking it through and whatnot, I think the more recent the support and resistance is, the better. Sometimes you're not going to get it though when things are pumping like this. So, but even so, there was a lot of trades that did work out as opposed to did not work out. In this case too, this is again where the trend ends. Real close to this 1 hour support and resistance. It flipped on us. It reacted to the fair value gap and the support and resistance. Came back, but just ended up continuing up. But then immediately after, getting in on the next trade. Same thing here. The trend was going down and eventually it stopped. This one consolidated and then kept going up, but we got stopped out before then. Good confluence here. Nice contact points here.
Do you ever reduce risk on TC1s?
I did in the past. I did. My rule was, let's get a zoom in on here. And that's what these fib levels are. When I would pass the halfway point, I would bring stop loss to half.
Mm-hmm.
And then once I passed the 1 on the fib, I was putting stop loss into money.
Oh, okay.
But I've noticed that if I do that with these new confluences, kind of like here, where it almost got stopped out, but it had passed the halfway point, or it just touched it, I guess. Oh no, I'm sorry, that was the entry. So here, no, I guess this one still would have worked out.
For a few weeks, I've been backtesting TC1s, and I have found that if it retraces past the 1 and you put it to break even and it stops you out, every trade I've done has just fully stopped out through the stop loss if it goes back after going past the 1.
If it goes past the 1, yeah.
Yeah,
okay.
if it goes past the 1, but I just noticed that, so wanted to give you my input.
Yeah, no, yeah, absolutely. You see, kind of like this one here where it didn't go past the one. Now at this point, I would have put stop loss to half, and it wouldn't have stopped me out. But I see that at least with these new confluences, more than likely it hits entry more than once before it goes to full profit. And like this one too, almost came back to entry again before it went full profit.
You're sniping those exits for sure.
Oh yeah, no, it's
Yeah.
as long as you're using the fib, yeah,
Yeah,
they're
it's
great.
perfect.
This one where the trend ends had some good confluence to the left, but again, this was the end of it and decided to switch. Here's another one where this is so much clutter on this chart. Let me get rid of this. Oh, what a mess.
Why did you take that trade at the beginning of that trend where it was still in the red for a bullish trade? See that? The second one? Yeah, that one. Oh.
Yes, I did.
Yeah, okay.
Okay. Here's because at the high of the fib, they had flipped. No, they didn't. I guess I did.
It worked out, so
yeah, I guess it worked out. Huh. I think I was looking at this price action.
yeah, it makes sense, but I was just wondering if you had a reason.
Yeah. This one makes sense. This one doesn't. But this one, yes, where even at the flip of these when they start to fan out, that makes sense. But again, here too, where it hits entry, revisits entry before it takes off. But yeah, that's
But John, do you take these on the 5 minutes or a 15 minutes? Because I can see that you're on a 15-minute time frame now.
Yeah, I'm on a 15 for. Oh, you know what? That's probably why those EMAs look like that. That's a good call. Good call.
Huh. That makes more sense. Hold up.
Yes. So to answer your question, both, if that makes sense. I always use the 5-minute EMAs. The 5-minute EMAs are the end all be all for me. But to avoid the noise, sometimes I will do a 15-minute time frame, and then I have these here. These are just a regular moving average exponential. This is the EMA that's built into TradingView. I'll use these mainly because the settings. These have multi-time frame functionality. So no matter what chart I put on, I'm always going to have the 5-minute EMAs. So sometimes I chart on the 15-minute to kind of, I guess, delete some of that noise that we're trying to ignore, while at the same time still using the 5-minute EMAs instead of the 15-minute EMAs. That makes sense. What time we got? Oh wow, the hour's up. Is there any more questions before we wrap this up, or can you guys still hear me?
Yes, we can.
Yeah, we
Yes,
can.
Okay.
For sure.
Just making sure. Let me check the chat. Second ID, that's getting back. Got you. Great, thanks. Yeah, anytime. Let's go right there. Didn't know that. Gotcha. On the 1-minute time frame, should I take it? If you're gonna look at the 1 minute, I would look at TCL rather than TC1 on the 1 minute. But yeah, 5-minute minimum, at least for TC1, for sure. You're welcome. A lot of thank yous. You're welcome. Yeah, I think I'm gonna alternate. I'll do TCL 1 week, TC1 the next. So we'll keep everybody in the loop for both. For the record, I've been doing some testing on TCL and TCL Max, and this confluence works even better on TCLs as well.
Nice.
Setting up limits. Yeah, for sure.
Oh, John, sorry, I have one more question for you.
Yeah.
Have you tested TC1s in Forex at all? I don't want to complicate things, but I'm curious because I've started doing it a little bit.
In TC1 specifically, no, not yet.
Yeah.
But,
okay.
Yeah, no, I haven't yet. It's definitely something that I've been looking to start into. I'm still trying to figure out, like, we have that nice range of like no less than 0.5%, but in Forex that's almost, I won't say it's non-existent, but it ends up being like a monthly trade or super
Right,
longs. Yeah.
That's true. Yeah.
So I'm
Yeah,
trying
just
to find
curious.
new parameters, I guess, if that makes sense. Yeah. And yes, we have one more hand. I see your hand out. Yeah, go for it.
Yep. Do you always trade on a 5-minute time frame or also sometimes on a 15-minute?
Like I said, sometimes I will look at the 15-minute chart, but I won't base my trades on the 15-minute EMAs. So that's why I have these EMAs separate, so that I can on the multi-time frame ones, so I can set them to 5-minute while I'm still being on the 15-minute chart. So just to be safe, 5-minute chart, 5-minute EMAs is the way to do it. Yeah.
Okay, so your flips are also based on the 5-minute chart, right?
Of course, yeah. Yep.
Of course, yeah. Okay, thank you.
Yeah, absolutely. All right. Well, thank you all for joining. I believe this was recorded. It will go up on the Teachable. And if you guys have any more questions, you can always @ me or DM me. And yeah, thank you all for coming.
Thank you, John.
Yeah, of
Completely
course.
changed my perspective.
Yeah.
I'm gonna give it another shot. I gave up on it because I just thought I just sucked at it and went full on PL, but you definitely gave me hope again. I like the perspective and I like the confluences, and I'm actually able to find it. So thank you.
Yes, thank you. That means a lot.
This is cool.
Yeah.
I kind of feel the same way. I didn't really do the TC1s and TC2s at all. I just didn't feel like they were for me, but I can see now that with these added confluences, that may not be the case anymore. So that's great.
Awesome.
Thank you.
That's awesome. Yeah, no, especially with the bull market and the trending price, all the stuff that's pumping now. This is it. This is the way to go. 1 to 4 risk to reward. Even with losses, it's always with these confluences, profitability is almost guaranteed. I'm not gonna guarantee it, but it's more than likely, with these confluences now. For sure.
Yeah, great job, John. Everyone appreciates you a ton. The work doesn't go unnoticed. And yeah, we're gonna be building out like formal. I saw some questions about like notes on just ICT in general and everything. I personally am digging in, like I know the team is too. Like we're just gonna have formal education resources for everyone to just be on the same page and get up to date with all this stuff. This is stuff that we can be implementing with everything, but like it's definitely that next leg. So yeah, everyone who's sort of like taking a front on that, like let's go. I appreciate everyone. And John, great job again, man.
Yes, of course. Thank you. Let's go. All right. Thank you all, and I will see you next time.
Take care, everybody.
Later, John.
Bye-bye. Yeah. Bye-bye.